Good afternoon. This is Chris Brecher with a Chart Patterns Mastery / Simpler Trading free video. What's today about? Really about the markets just staying in a triangle with lighter and lighter volume. Some saying the SPY ETF volume is the lightest in years. So usually when we've seen that, it's been near a top, but right now it's just the apex of a triangle like you see here. So the thing in here is, how can you game the system? Well, one of the ways is you look to see if other things are broken up or down with the triangles. So you take the NASDAQ, still in the zone. How about the Russell? Well, it's still in this zone. So nothing's broken out. How about the transports? They're still actually in the lower echelon. And then you have the Dow Jones Industrials, the ETF, near the high. So it's all screwed up. Now, that being said, I'll show you some interesting stuff. Number one is this. This is the Indian market. So the Indian market, the Nifty 50, usually correlates pretty well with the ES. As you see, it's been in just a down slope now, almost 10%. So I'll put it up here side by side. So on the left, we'll put the weekly Nifty, and then on the right, we'll put the weekly SPX. That's a big divergence. Like I said, usually they move together. On the other hand, that's the bad news. On the other hand, the good news. Go and look at some of the European markets. They're going straight up. I mean, parabolic. Parabolic. So it's really hard to get that bearish on the SPX when those markets are going parabolic. Even the Chinese market, when you put up the FXI, has acted a lot better, actually, since I posted on StockTwits down here at 32. So you don't have those massive divergences that would really be a warning sign. Now, let me show you some interesting stuff. Here is the DE Dow. This is the German market. It's called DE Dow on Thinkorswim. And I want you to see what happened back here. This is July. We were warning. See on how the DE Dow went straight down. This is before the U.S. markets did. The Japanese market did the same thing, but you're not seeing it now. That's why you have to have longs and shorts. Now, what would upset the apple cart? Number one, I think, is if the bond markets test the lows from back here, back in this area. Then I think the SPX actually could sell off and the U.S. markets could underperform. Now, what would make me think that with the CPI coming out? I'll show you. So here is what's been happening with the CPI versus the Dow Jones Commodity Index. The Dow Jones Commodity Index on the left has been going straight up. That's usually bad for bonds. Bonds hate inflation. Now, the big deal is, this is real time, obviously. The CPI looks back about 30 days. What happened 30 days ago? Yeah, this was going straight up. Usually when that happens, the CPI surprises to the upside. Heck, the bonds are already down a lot. So if these go down even more, I think that's going to be problematic for the ES. We'll see what happens tomorrow. That happens at 8:30 Eastern. Take care. Have a great night. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.